Hello friends, I'm Himanshu Jain. I'm one of the co-founders of the Wall Street School. In the last 12 years, we have trained thousands of students in the varied fields of investment banking. Also, we have placed the students in plethora of finance verticals like investment banking, corporate finance, portfolio management, equity research, consulting, business modeling, credit, etc. Now, a lot of students have one particular dilemma: whether an investment banking career is good for them or an equity research career is good for them. And they usually try to compare specifically these two ones. So to address to this, we have made this video in which we are going to cover the difference between an investment banking career and an equity research career, the roles and the responsibilities in both of them, the salary structures that you can expect in both of them, the educational qualifications that you require in both of them, and the career progression that you can expect in both of them. So to get a clear picture, watch this video till the end. So let's get started.
Hello everyone, welcome back to the channel. In today's video, we'll be discussing investment banking versus equity research. Many candidates have asked us n number of times this question: which one is a better profile for me, or which one will have less working hours? What's the career growth trajectory? How much salary I should expect? So I'll be answering all those questions today. So we'll be starting our discussion from the very basic. What is equity research? What is investment banking? Then I'll be talking about a typical day of an equity research analyst, a typical day of investment banking analyst, what all tasks he does. Then what we recommend as an educational qualification for you to land job as an equity research analyst or investment banking analyst, how your career will progress, what will be your initial median salary if you start working in India. And many people, after working for a considerable amount of years into investment banking or equity research, look for exit. So what could be your exit opportunities? So let us start this video. Firstly, let us start with the basic. What is equity research? By answering three basic questions: what they do, why they do, and who do they work for? So what do? They give buy or sell recommendation after doing extensive research. Why they are doing that? Because they want to beat the market. They want to generate alpha on the portfolio of their client, right? And who do they work for? There are two kinds of equity research jobs. One is on the buy side, one is on the sell side. On buy side, the clients are like mutual funds, hedge funds, pension funds, corporates with surplus cash. Basically, these equity research analysts will be giving their advice to the buy side team, and the buy side team will be actually investing in those shares or recommended securities. On the sell side, you will work with investment banks or brokerage houses. They will recommend their clients to buy and sell some securities, and on the basis of it, they earn some commission, right? So sell side and buy side. This is what a typical equity research job looks like. You'll give buy and sell recommendation after doing extensive research, following company and sector and economy very closely. And you will work for either on the buy side or on the sell side. And your ultimate aim, despite of you doing n number of job, is to beat the market, is to generate alpha. Now let us move ahead and see what is investment banking. Answering the three basic questions: what they do, why they do it, and who they work for. So what they do, basically they are helping clients to raise funds or do mergers and acquisition. I'm typically talking about investment banking division of an investment bank. In an investment bank, there are multiple floors. You could be working in research division, you could be working in trading desk, you could be working in, say, wealth management. But I'm talking typically about what traditionally investment banks do. So they help clients to raise funds or do mergers and acquisition. Why they are doing that? Because they'll simply earn commissions on it. So if you'll help someone to, say, raise 1000 crore in the form of debt or equity, maybe 2% of it will be your commission, that is around 20 crores. And mergers and acquisition, on the deal size, you earn some commission. Who do they work for? So there is no sell side, buy side investment banking, but there are sell sides and buy sides in M&A transaction, mergers and acquisition transaction. So when you are helping your client to buy another firm, that is known as buy side. And when you are helping your client to sell his current asset or current company at potential good valuations, this is called a sell side in an M&A, right? So just to summarize it, you are helping client to raise funds or do mergers and acquisitions. Obviously, there are a lot more details involved. You could be working in ECM, DCM, you could be going for due diligence, all those things. Keeping those aside, basically you are helping clients to raise funds or do mergers and acquisition, that is buy and sell companies. You are earning commission by helping them to buy and sell companies or raise funds. Now let us move ahead and talk about what does an equity research analyst do. Okay, so typically as an equity research analyst, you will start working before the market opens. So in India, active trading starts around 9:15. So you'll start working somewhere around 8 a.m. So it is your responsibility as an analyst to collect the news, the market updates, to prepare a note on it and then circulate it in the entire office. So suppose you start working around 8 a.m. It will take you around 30-35 minutes to collect the information, prepare it in a note format and forward it to everyone. Suppose you are done with this by 8:35. From 8:35 till 9:15, 9:20, you will have a bit relaxed working environment in which you will check your emails, speak to your colleagues, talk about your share ideas and etc. etc. And once the market opens, along with your working, preparing models or maybe writing reports, you will keep an active eye on the market. So if in case you spot something unusual on the shares that you are tracking or in market in general, you will inform your seniors. Right? And suppose this is a normal day, nothing extraordinary is happening in the market. Somewhere around say 9:15, you will start your regular activities. So you'll start tracking the companies on which you are working. So if in case there is any new news about the company or about the sector in which this company is involved, you'll try to analyze the impact of that news on your sector, on your company that you are tracking. Then if in case it have significant impact, then you will update your models. And if in case the company have came out with recent quarterly results or annual results, based upon those results and your expectations, you'll again update your model. And this will be around, say you started around 9:15 till 12 o'clock, you are working on some models, actively tracking companies. Then there will be some con calls. So along with your seniors and others, you will attend some con calls of the company. You will be required to make notes on those con calls, analyze it and again circulate it to your seniors and other people working in your team. So maybe you'll attend one con call in a day, or maybe sometimes there are no con call, or sometime during the earnings season there are many con calls in a particular day. So it really depends what kind of workload or companies you are tracking. Then based upon those con calls, your reports, your analysis, the news hitting the market, you will come up with the forecast, earning updates, and you will give recommendation whether you recommend to buy this security, sell this security, or hold this security, and we will give you a price targets. So you will prepare three kind of reports. Will be one, the first one will be initiation report, in which you are actively starting to track a company. Then there will be a coverage report in which you will update the report every quarter, or if in case there is some significant news. And then there will be a sector update. That is, all the companies you are tracking, they belong to some particular sector. So you'll be preparing a report on those sectors, right? So this is what a typical day of an equity research analyst looks like. Now let us move ahead and discuss what does investment banking analyst do. Okay, so typically an investment banking analyst start working around 9 a.m. in India, and in first 30-40 minutes, you will catch up with all the emails that you have received overnight. So these could be from clients who are working overseas, or maybe from seniors who was working late in the night, or maybe from someone who came to office earlier than you and have assigned you some tasks. So you'll reply to all those emails. Somewhere around 9:30, you will start with your regular day-to-day affairs. So maybe working on a financial model, maybe making presentations in the form of teasers, pitch decks. So you'll start working on these documents, and maybe say till 1:30 you'll work on these documents or these financial models. Then assumingly these documents or models are completed, then you will send it to your senior for verification, but your senior may not be available immediately. So you will have to wait for his revert. By the time it's already 2 o'clock, it's your lunch time. So some days you'll have lunch with your colleagues and you'll discuss ongoing deals and some interesting things happening in the firm over the lunch. Or maybe some days you'll have to accompany your senior over the client meeting for a lunch, and in that meeting you are requested to take notes of the important pointers discussed in the meeting. You come back to your office, email those pointers to the senior so that client could be served in a better way. And by the time it's already 4 o'clock, by the time you come back, or maybe you're working on something with your colleagues, then you'll receive back the revert from senior about the model you sent in the morning. If in case you have pointed out something, you'll rectify it and send it by evening. By evening means before you leave for the day. Then it's already 5:36 p.m. So you'll connect with clients over phone call to schedule next day meeting, maybe answer their queries, and whatever doubts they have, you'll try to address them. And it will take around half an hour, 1 hour to contact all the clients and discuss everything with them. So by 7 o'clock, you are done with your day-to-day affairs. The rush hour is gone, but still your work is pending. So whatever mistakes your senior have pointed out, or whatever simultaneous you are working on, you'll try to complete it. When others are gone, when there is less rush in the office, you'll complete the remaining part and maybe leave by 8. So typically it is 11-12 hours working hours on a normal day. But if in case of busy season, or if in case you have to close something on deadline, you'll have to stay in office by till 9:30, 10, 11, 11:30 also, right? Now let us move ahead and talk about the recommended educational qualification. Okay, now let us move ahead and talk about recommended educational qualification. First of all, I would want to clear myself. These are our recommendation. I'm going to recommend qualification for investment banking, like you have to do education in commerce, maybe in accounting, maybe in finance, or in economics. But that doesn't mean an engineer or a person who have done his graduation in arts and law cannot come into an investment banking. If in case someone is at a very nascent stage and planning to make a career into investment banking, then go for these qualifications, right? These are my recommendations. These are not necessary requirements. Understand the difference. Once you have done your normal educational qualification, normal graduation, then I'll recommend you to go for MBA Finance or Chartered Accountancy or CFA, either of these three. The most preferred one is MBA Finance, but this should be done from tier 1 college only. If in case you have done it for tier 2 or tier 3 college, then most of the investment banks will not recognize it. The best of the best investment banks will definitely not recognize it. So you can go for Chartered Accountancy, CFA or MBA in Finance from tier 1 college. The shortest, the cheapest degree to do is CFA. You can complete it around 1.5 years and you can do it under 3-4 lakh rupees, right? CA is bit risky of a career path, because if in case because of low pass rate you are not able to qualify Chartered Accountancy all 3 exams, that is foundation, intermediate and the final exam, then you are nothing. You are just a bachelor's in commerce or bachelor's in accountancy. So the safer path is CFA. Along with level 1 qualification, level 2 qualification, you start working in an investment bank, and while working you gain your level 3 qualification and the charter holder. If in case you want to get into equity research, understand this, there is no specific course that will teach you stock markets or research, but to demonstrate that you know better than the other candidates, or just to get yourself highlighted, you need to have some extra qualifications into your application, right? So you need to do bachelor's into commerce, accounting, finance or economics, just like in investment banking. Then go for CFA or go for Chartered Accountancy. Chartered Accountancy will help you to understand balance sheet, P&L, cash flow statement in the deepest way possible, and CFA will help you to understand various asset classes in the deepest way possible. In fact, CFA is the degree made for research and portfolio management purposes. So if in case you can go for CFA, well and good. If in case you are already a chartered accountant or have started pursuing chartered accountancy, complete your chartered accountancy and then you can apply to equity research firm for your job. Can I go for a 40 days, 50 days, 2 months, 3 months course and become an equity research analyst? The sad part or the truth is, most of the courses available in market are for you to manage your personal money. It will not help you to get a job as equity research analyst. I'm not talking about all the courses, but if in case you want to get depth of doing a research, hardly there are any courses that will help you to achieve that. To maintain institutional money, you need professional qualifications and extensive amount of training that CA or CFA can bring to you instead of a 30-40 day course, right? I'm not demeaning any of the courses available, but you need a substantial qualification that will be with you in your entire career. And for that, if in case you're required to devote 1, 2, 3, 4, 5 years of your early career, then you should, right? Now let us move ahead and let's discuss the career tree. That is how you will progress. So into an investment banking, you will start as an intern or maybe directly apply as junior analyst. Then you will have to spend around 2 to 3 years to get promoted to the post of senior analyst. Then around 2 to 3 years to get promoted as associate. Then around 1 year, 2 years to get promoted as manager. So all in all, it will add around 5 years to reach manager designation. And then from manager to vice president, it will take around 3 to 4 years to reach vice president level. And then again 2 to 3 years to reach director level at least. So it will also add up to 5 to 6 years. So from being junior analyst or intern to reach director level, you'll need around 10 years of investment, and everyone cannot make it to partner level. So this is the last ladder into your career for most of you. And some people can make it to the partner level if in case they are exceptionally good. But most of the people will end up being a vice president or director for rest of their career, and this is not bad. The perks, the pays at this level are also very good. And if in case you are planning to go for equity research, you will start as an intern and then junior analyst and then senior analyst and then associate. The tree is very similar for investment banking and equity research till the time you reach associate. After becoming an associate, you will become head of research. Basically, you will be many associates will be working within you. Instead of being called as a manager, you are called as head of research. That is, you will be looking after one particular a group of people who are tracking many sectors or many securities. And then there is head of equities. So head of equities could be looking for Asian markets, and another head of equities could be looking for international markets. And then ultimately you would want to become a fund manager or portfolio manager. So junior analyst to senior analyst, it takes around 2 to 3 years. Senior analyst to associate, it takes around 2 to 3 years. Associate to head of research, it takes around 4 to 5 years. And from head of research to head of equities, it again takes 2 to 3 years. So all in all, you have to devote to reach head of equities, you have to devote on an average, let's say around 10 years. Okay, so to reach at a substantial level in equity research for a firm or investment banking firm, you will need 10 years of blood and sweat. And then becoming a fund manager, everyone is not able to make to the fund manager level, right? So head of equities is something you might end up being over the period of time. And if you are exceptionally well, and the luck or the circumstances favor you, you may end up becoming fund manager. Okay, now let us move ahead and talk about initial median salary in India. See, this is reality that investment banking analysts are paid more than equity research analysts by 10 to 20%, right? On median level, investment banking analysts in India are paid somewhere around 9 lakh rupees per annum. This has shot up in last 1 year. When I prepared last video on investment banking salaries in India, it was around 8.5 lakh rupees. And our internal research also suggests that investment banking salaries have gone slightly up in last 1 year. Equity research analysts on median level, as per our internal research, are paid around 7 lakh rupees per annum. This is data as per Ambition Box. This is data as per Glassdoor. And this is in line with our research. The median salary is around 7 lakh rupees. See, the difference of 1.5 lakhs may matter to you in the initial or very beginning of your career. But over the period of time, this will not matter, right? If in case you are interested in dealing with clients on a day-to-day basis, interacting with people, closing the deal, then investment bank is the choice for you. And if in case you would like to work on something sitting at the back of a laptop and not dealing with people, then you can go for equity research role. Do not make this 1.5 lakh median salary difference as one of the criteria to decide whether you should be going for investment banking or equity research. In whichever job profile you are keenly interested, your heart and soul lies, choose that as a career and money will automatically follow. Now let us move ahead and talk about exit strategies. See, after working considerable amount of years, let's say 7-8 years into investment banking or equity research, you would want to end up with some sort of work-life balance. At least 90% of the people would want that, right? In investment banking as well as in equity research, the work pressure, the working hours are relatively higher, especially on investment banking side of things. You may end up with 12, 13, 14 hours of work day continuously for weeks, and that's not good for your work-life balance. So most of the people who are working in investment banking at some point in time would want to change their industry. So as an investment banker, you can switch to PE funds after getting considerable amount of experience working into investment banking domain. You can go for hedge funds. You can start your own advisory or consultancy services or boutique investment bank, or you can go to corporate finance. In these industries, the working hours are relatively lesser than investment banking. Okay, now talking about equity research, most of the people start as an equity research analyst, where recognition as well as the work pressure, recognition is less and work pressure is generally on high side, and the pay scale is also not as good as on the buy side. So if in case you want to move up a ladder in your career, you will prefer to become a fund manager after working considerable amount of years. So you'll go to an asset management company or hedge fund, and or you might go for buy side of the equity research. So where work pressure is less, there is recognition, the pay scale is also on higher side if in case the firm is able to make good amount of money on the basis of your buy ideas, or maybe you'll start your own portfolio management services, a boutique PMS, right? So these are your exit strategies. Okay, so this is it for this video. In this video, I've tried my best to add value to your time by differentiating investment banking and equity research, not only from job perspective, but from your salary perspective, educational qualification perspective, a typical day, how it would look like, how you can plan your exits. So if in case this video added value to your time, feel free to subscribe us and give this video a like. Till next time, thank you for watching this video. See you in some next video. Bye-bye.